The liquidity and capital index, which indicates the liquidity levels of banks, is rising right now. Does this signal a potential reversal in the upward trend in Bitcoins? Hey everyone, thank you for jumping back into the Crypto Odds. Please give the video a thumbs up and subscribe to the channel. The liquidity and capital index refers to a chart that tracks the reserves held by banks at the Federal Reserve System. This chart has become a significant indicator of liquidity levels in the banking system. During the COVID-19, the high levels of reserves, the liquidity, contributed to a super cycle of rising asset prices, including Bitcoins and your altcoins. The chart often shows a positive divergence with Bitcoin. You can see that we have the positive divergence with Bitcoins, which means it tends to move in the same direction, but with some delay. Currently, the Federal Reserve has ended the quantitative tightening process, meaning it is no longer pulling liquidity out of the economy by reducing their balance sheet. However, the Fed is still engaging in some form of quantitative easing. Specifically, it is repurchasing short-term treasury bills, T-bills, The pace of this is much slower compared to the last cycle. This slow invasion of liquidity into the system is a key factor influencing the market dynamics, including Bitcoin's price actions. You might be wondering why in 2023 we had a stronger upward move in Bitcoin and altcoins, and this bullish trend weakened in 2024, with even more weakness in 2025 compared to the previous years. Despite interest rates being reduced and monetary policies are shifting towards a dovish stance. And even though we reached the end of the quantitative tightening in this month, the market is still didn't grow. You ask that why? Let's explain that for you. The RRP, Reverse Repurchase Agreement, is a short-term contract between the banks and the Federal Reserve. This agreement was created after the COVID-19 pandemic because the liquidity in the economy was extremely high and the Federal Reserve wanted to collect that excess liquidity. In this contract, banks and institutions purchase short-term US Treasury securities from the Federal Reserve to pull money out of the economy. The Federal Reserve committed to return the money back to the banks in the short term. This chart shows that in 2022, after the pandemic, the Federal Reserve collected this large amount of liquidity. Then in 2023, the money was slowly injected back into the economy until late 2024, after which the liquidity injection remained constant and dropped to zero right now. You can see that we are in zero right now. This is why we have seen a weakening trend in the market after 2024, and the altcoin rally that occurred in 2023 and 2024 and didn't occur again in 2025. And the RRP reduced the impact of the Federal Reserve balance sheet, meaning, this one, the RRP reduced the impact of the Federal Reserve balance sheet, meaning its quantitative tightening policies, muted the RRP mute the quantitative tightening. In the past, we didn't see liquidity flow until the policy was completed. However, The RP during this period reduce the impact of that effect, and in a situation where the RP close to zero, and the Federal Reserve are repurchasing their short-term T-bills, this could indicate a scenario where liquidity is being gradually injected into the system, and we can see that we have the positive divergence in our Liberty capital indicator every time when we had a positive divergence in our this indicator, this index, I mean, after a few delay, the Bitcoins moves upward and follow that. If you look at the Bitcoin chart, in our current situation, we are similar to the past cycle. After we drop and we hit a major support level, the RP, if you look at that, the RP indicator moved slightly upward, but then continued to drop again, and leading to further market declines. There is a possibility that Bitcoin has reached a point of oversold condition in our RSI. You can see that we are at the oversold condition on the RSI, and we might hit a lower low like 72k, as I mentioned that in my previous videos. We could hit a lower low in early January, and gradually in late January or early February, with a divergence forming a bullish divergence, I mean, on the RSI, we could see a pullback to our trend line in like 95k to 105k range, like that. But what is the reason we can't easily make a new all-time high for a Bitcoin? The Bank of Japan is the biggest obstacle and the barrier we face. Interest rates in Japan are rising, and we saw a rate hike in this month a few days ago. There is a possibility that the Bank of Japan will implement 3 more rate hikes in the next year, 2026. There is a possibility. This interest rate increase in Japan is gradually impacting the global economy, especially since cheap money will no longer be available, and as a result, there may be less demand for a risky asset like a Bitcoin, and people may move more toward to a low risk asset like gold. And the retail investor see gold as a low risk asset with a strong growth. It is still rising. They might FOMO into the gold rather than investing in the risky markets like crypto and Bitcoins. Also, the Federal Reserve no longer directly injected liquidity into the market through quantitative easing. The repurchase of the T-bill and the halt of quantitative tightening injected the preservation of the current market conditions. However, this liquidity injection is limited. This means that under the current circumstances, we can no longer expect repair and the significant actions from the Federal Reserve that would directly lead to the rise in the Bitcoin price. Consider the possibility that if interest rates in Japan continue to rise, that could lead to a decrease in global liquidity, and investor may shift even more toward low risk assets with the fixed returns and investment, rather than the risky asset like a Bitcoin and crypto market. Given that liquidity conditions are more limited now compared to the past, and there is no cheap money in the market for a Bitcoin to grow, and reach a new all-time high, more liquidity easing in the market is needed, and our current monetary policies, ending the quantitative tightening in USA and interest rate hikes in Japan, do not create any significant liquidity in the market. Without the further easing and adequate liquidity flows from central banks, we cannot expect a significant bullish trend in the Bitcoin and your altcoins. We might see a weak price rebound soon, but in my view, I don't think there will be enough liquidity for a new all-time high in the Bitcoin in the market. If you like this video, please give the video a thumbs up and subscribe to the channel. Peace out.